The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 68, NASDAQ off 69, S&P's down 16, gold contract down $6, trading $15.05 an ounce. You get silver up 3 cents, $18.20 an ounce. Light sweet crude up 33 cents, $58.18.
Seems like 60's coming down at us.
We haven't heard about 60 in so long.
Right?
Notes and bonds. You get the 10-year note down 9 ticks, trading 130.18. 30-year off a half a point, 15 ticks, 162.16. And King Dollar up 92 ticks, trading 97.890. You get the euro at a 110. The yen is at 107.24, and the pound is at 123 to 1 U.S. dollar. Let's get over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do each and every Tuesday, Wednesday, and Thursday. Every trading day right here, folks. 11 to 12 Eastern Standard Time. Kevin and his team, TD Ameritrade, Thinkorswim, outstanding program. You want to understand options, option strategies, futures, great program. If you haven't test-driven yet the Thinkorswim platform, real easy to do. As you're sitting there watching TV, just hit that platform, bring it up. They'll allow you to trade with paper money each and every day. And as we talk about defined risk, guess what? We know that you blink and the S&Ps are either up or down 15, 18 points. It depends what day it is,
We have
man.
action, man, from highs to lows.
Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Thanks for having me on, guys.
Thank you, man. Telling you. You know,
this is a day, there's a lot going on today. And the pace of this market is going to pick up the rest of the week. It started off a little slow yesterday, a little light on data, but the data picks up a little bit today, and I think the rest of the week's going to be pretty interesting as we get moving here, because you had some data today. You've got CPI, PPI coming out Thursday, Friday. You've got an ECB decision coming out early Thursday morning. You just had a JOLTS number come out that was a little light, but still a big number, 7.21 million on JOLTS. You had NFIB small business come out this morning that was still a good, nice high number at 103.1. That's a good number. That being said, markets look like, Tom, tell me if you think I'm right here. Markets look like they're rotating out of some indices, out of some sectors and into others. The banks seem strong, and FANG stocks and IT in general look pretty weak.
You know, it was amazing yesterday that, there's no doubt, the note and bond market, we're getting hit yesterday. I didn't have the volume behind it, but we're getting hit. And there's no doubt the XLF was strong.
Yes.
It was really intriguing that, okay, if the yield goes up slightly, are they actually going to get that strong, I think, what we have is like this is the beginning of a new year, right? The bottom line is that now, you are back in action here.
Yeah, get yourself positioned, right?
Get yourself positioned. And, it's hard to comprehend, as all these traders and, big funds and everyone comes back to work on a full-time basis, okay, where are they going to position themselves, right, for the next 3 to 6 months?
Yeah.
That's the $8 billion question here, man.
Right. Well, looks like what's going on. Look at the fact that, the E-minis are down. The NASDAQ is down pretty hard, actually, and the Russell's unchanged.
Right.
Right? I mean, which tells me they may be rotating. I mean, you've got financial strong this morning, and you've got the Russell strong, which tells me they're rotating into financials and regional banks out of these big high-flying names. So there's a little something going on here.
And what you've had, folks,
that we got to really pay attention to.
No doubt. And what you've had, and this is, pretty wild to think about it. We're September 10th. The Russell 2000 topped out in July of 2018. So, and when you take a look at what Kevin's saying is that, for the last month, the NASDAQ, Kevin, and the NDX look to me like they were getting a lot weaker, which is very unusual because they take the market up, they take the market down, and there's no doubt. How many times have we heard that? With the small caps, people keep going into value and they've been getting trapped in this value trap for a long period of time. You know what I'm saying? Like you think you're buying value, and all of a sudden that value goes lower and lower and lower. But as you just said, they got to move somewhere. That's the real bottom line, and that's where they may be moving, saying, okay.
And think about it. You've got Netflix, which has some issues going on right now with its, how Disney and Apple are coming up as competitors. You got Facebook, Google, and Twitter all coming under some scrutiny, possibly from the government, about privacy and things like that. I think this is going to heat up, especially in Facebook and Google.
Yes.
So that might be part of the genesis of this rotation out of some of these names going forward. So we got to watch it play out. I mean, obviously, a rising 10-year is going to help the banks and financials for sure. Just how long does it go here? No,
there's no doubt. And this aspect of Facebook and Google, I think it's going to be a monster deal, meaning that, so how long? It's been about a year and a half now that little by little it's chipping away. That, if you read stories back a year and a half ago, they were all making sure they get more lobbyists, getting more money down to Washington, and I think the reality is we all know that they have a monopoly in the advertising business, and that's two companies are running everything.
Yes.
So it's like, that's going to stop.
Yes.
that's going to stop, man. I mean, that's the bottom line.
Yeah.
And it's just going to be the question of how do they take it apart?
Yeah.
And how long's the battle going to last? And the battles, could last 3, 4, 5 years, man. I mean,
sure.
This won't be a, but.
And guys, all you got to do is go back to the history and look at Microsoft.
Exactly.
In the late 90s, when they were under the same scrutiny, and how long it took, and you can see what it can do to a stock.
Right.
Right. And Microsoft, even though that company was of high quality, it languished for a little while as they were under this scrutiny. So it's certainly something that you should be looking at for sure.
Yeah. When you get the spreads that those companies have, it makes a difference when you have. And in this case, I would say that I haven't heard too many people that are saying that they shouldn't go after them.
Right.
So we're talking a collective here, whether it's the government, whether it's, companies in general.
Yeah.
It's intriguing what hasn't happened, but, this is a one-way move inside the advertising business. I was talking about this yesterday. Like the advertising business in general got rolled up, and there's only like 2 or 3 monster players in the advertising business. They could care less. They love it because they get the percentage of it. Period. So you're
it
not
doesn't mean they won't make money.
Yes.
That I wouldn't go near as far as to say that, but they're going to be under some scrutiny here, and I think it's going to play out. Remember, and it looks like, at least it appears, especially in when you think of Facebook, they have no friends.
Right.
Democrats, Republicans, no one is in favor of Facebook. I mean, Google seems to have some friends on one side and not so much on the other, but it certainly looks like both sides are interested in going after these companies.
And Google's probably going to take a little bit of extra heat just because of how bad Facebook has been for them. It's just it opens it up.
Listen, folks, right here, outstanding program every trading day. Kevin, you have a great one, safe one. We look forward to the program.
Thanks for having me on, guys.
Thank you. Stay right there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow Industrials down 87, NASDAQ off 63, S&P's down 17. Let's go over to the Dow Industrials and take a look at the strength versus the weakness inside the Dow Industrials here.
What's bringing us down? What's bringing us up?
Exactly. So, Big Mac. Let's take a look.
I had a Big Mac last weekend.
Was it good?
It was delicious. Yeah. They got a deal. Buy one Big Mac, get one for $1 right now.
When was the last time you had one?
Before that, a while ago. But literally, I had it Saturday. Saturday night, Big Mac.
I remember.
Somebody I was with. What happened was somebody I was with was getting a Big Mac, and the deal was buy one, get one for $1. So it's like, well, you have to get a second one if you're buying one for like $3 or $4. So it's delicious, yeah. So I'll take that second.
You know what? I haven't had a Big Mac in like 50 years.
And the way
I love them.
And the way they got them was extra special sauce, no lettuce. And I was like, fine, just do it same day. Order
the pickles,
extra special sauce.
Because you want the sauce dripping off.
All right.
Yeah.
There's the McDonald's commercial for the day.
Totally. So you get McDonald's doing 53 negative points, Visa 42, American Express 22, Merck 20. On the way up, putting positive into the Dow, even though it's negative by 98. You have Boeing putting 43, Chevron 20, Goldman 20, IBM 10. Inside the NDX 100, the strength out here, Baidu is up 3.2%. You get Hasbro up 3%. Alexion is up 3%. Taken away from it, Mercado Libre is down 4%. Vertex Pharmaceutical off 3.9%. JD off 3.8%. And C-Trip off 3.2%. Let's go to Apple. So Apple, this is Apple's big day, right?
Yeah, I mean,
you know, it's surprising. It's Apple's flat, down 63 cents. This is,
and they were down more. They were down a full % at one point. Let's just pull up this chart before, because it was, I think. Has this not caught up to? So maybe this is a delay that we're looking at, but you can see, I mean, we're trading at 211.82, right? And to jump back, where we were, 213. So we're up $1.50, and that's probably just a 15-minute delay we're looking at.
Yeah.
But yeah, still negative action. This is, and I think this is a testament to how each year this day becomes less and less meaningful, right? This used to be a monumental day for Apple. They would announce the new phones as they do today. They're going to launch the new iPhones. So you'll have Tim Cook will take the stage in Cupertino, California on Tuesday to unveil the latest iPhones, company's most important day of the year. The smartphones make up almost half of their sales, and new models juice other sources of revenue. So 3 new models coming down the line, Pro upgrades to the iPhone XS and iPhone XS Max, and a replacement for the iPhone XR. This is where I'm even an Apple fan. I get lost in all of these models.
Yeah.
The company's also readying the new Apple Watches. Now, that is something that has caught my eye. I have not bought one, but the idea that you get all the health data, your heart rate, your just a plethora of stuff every day is pretty cool, along with the fact that you don't need your phone to work with it anymore. It can kind of act like its own phone.
So, you know what's interesting about that is that that's where it comes down to the aspect is that I wonder how long they're going to call it a watch.
I agree.
Isn't that wild?
Because, and that's kind of where it got. The first iPhone watch was not that way. You needed to have your phone on you to pair the watch with the phone to be able to like talk through the watch.
Right.
The most recent generations, you are able to leave your phone, go with your watch.
Which is huge.
Which is huge, I agree. So that's really where.
And also, health-wise, I can see, phones right now are $1,000, right? I mean,
sure.
Okay. I can absolutely see that people can get wrapped around a device on their wrist that you can talk on, but simultaneously you're saying healthy. Yeah. Because you're mixing. And
it's pretty stylish, too, which is pretty cool, right?
You're absolutely, basically taking care of yourself.
Yeah, right. Yeah. And I wonder how it'll affect, because everyone loves the camera, though. Where's your camera? Maybe they'll get a high-end camera on that. No, I'm just saying, it's the next thing. That's it, because but you are going to, everybody likes those cameras. But I think it's only a matter of time before you press the button, man. You got a high-end camera right here, right?
Right.
Why not?
Right.
So on this update, it's going to be about the cameras. These handsets will have 3 cameras on the back for wide-angle photography. 3. It's going to have 3. We're coming pretty far, man. And higher resolution pictures and much improved video recording, new AI-powered features for auto-correcting photos, putting people back into the frame when they've been chopped off, and live editing of video.
Back into the frame of being chopped off.
I know. And what about live editing of video while it's being recorded? I wonder what that's...
Technology is so cool.
It is.
Man.
I don't even know how that works. It's so kind of high-tech. And they're going to rival Google Pixel phones with a focus on improving pictures taken in low-light environments. Face ID camera will get an upgrade, too. And then... What's this? They want them to last longer? I don't know if I believe this. Let's see the spin. There's been a lot of talk about Apple charging higher prices for replacing shattered phones, but this year's models are less likely. The new handsets are said to withstand many types of drops. So they have shatter-resistant glass and shock resistance. And they can survive underwater for several hours. That's pretty cool.
Really?
Because everybody might drop their phone in some water.
So the iPhone's XR replacement is getting a new camera, too. Apple will add a second camera in the back of the lower-cost iPhone. The Apple's Watch big changes came last year, okay. Updates will be software and casing focused with the company planning new versions of ceramic and titanium.
Okay.
A slew of new straps and... Okay, so
that's a lot of flash on the...
Yeah, that's flash.
And it makes sense, though, because I was like, what are they going to do to the watch? Because we just talked about... The big improvement was you don't need your phone.
Right.
And so they just kind of pushed that one in.
Right.
Yeah.
Let's go to John in Philly. What's happening, brother?
Tom and Tommy, how are you fellows?
Morning, John.
Good, man. Yourself?
Good, thank you. Hey, I wanted to ask you a quick question about the S&P 500 index. And what's looking in my mind are a couple of factors. One, we've got an ECB meeting this week, and a Fed Reserve meeting next week. And, of course, the market scuttlebutt is more monetary easing or stimulus is likely forthcoming. And that's followed by a week from Friday, which is quad witching, options expiration. And we had all that put buying in August. So what I'm wondering to myself and asking to you to comment upon and tell me what you're seeing, do we have the prospect to squeeze last shorts later this week and then next week into options expiry on September 20th?
So the way I'm looking at this S&P right now, and I'm going to bring a few more things into this, John, right? So what we have here is this, right? You try to get up to the highs. Last Thursday had a good day. You had a failure in price and volume yesterday. And the way that this is our first correction in gold, that's been running since May. You had the bonds pull back. Now, gold came off the highs and had some volume, but still lighter volume than it's going up on, and what's going into. Bonds came off the high with light volume, but still on price. When I've seen this happen, that it's all going south, and the S&P hasn't gone south much, okay, but they were all simultaneously going south. That is a heads up to me that the S&P is going to go south in a big way. And the metals will reverse, and the bonds will reverse. Because when they throw that baby out, man, to me, that is how these things normally start. Do you know what I mean? That everything goes, and people look and say, hey, why is everything going down simultaneously? So to answer your question, no, I don't see it. I don't. There's not a lot of people shot. You know, I know. You know, the shot squeeze deal. Okay. You know, when you look at the stats aren't there. Do you know what I mean? That.
Great.
You know.
Thanks so much for the help, Tom. I appreciate it.
Okay, man. Have a great one.
Thanks,
have a
John.
safe one. Stay right there, folks. Tommy and I are coming right back. Dow's down 70, Nasdaq's up 48, S&P's down 14.5. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 65, Nasdaq's up 47, S&P's down 14, and WeWork. This is what a saga this is. So WeWork bonds here. It looks like the prospect of a delayed WeWork public offering is giving bond investors the jitters. The office leasing company's high yield bonds slipped below face value the first time in New York since the company filed to go public in August. The 7.875 notes due 2025 dropped 3 cents to 97.75 cents. You know what's amazing about this WeWork, folks, and what's going on is that there's a few stories out there. When this roadshow, the roadshow supposedly supposed to start this week, SoftBank, the news out here is SoftBank is urging them not to go public. When you look at this, let me see if I can get it. Goldman was out here 2 months ago pushing $65 billion. So you went from $65 billion to approximately $41 billion to 20 to 40 billion to under 20 billion. If the Wall Street Journal yesterday was on the headline.
Yeah.
You know.
That's what it was looking like, right? If they had just gone along without caring about, we're just going to go IPO at whatever value we get. They're like, listen, you might come in at under 20.
And what I suspect is going to happen here is that the folks that are trying to push it out, we're trying to push it out as the new tech deal.
Sure, at that valuation, especially,
that's
right?
And there's too many real estate people out here that have been in the business forever that understand that it's a real estate company.
Sure.
It's a real estate company, it's a real estate company, it's a real estate company. And guess what? You're not going to get a valuation like that at a real estate company. So they're going to go back to the drawing board and figure this thing out. You know, and it's a real estate company that is losing money hand over fist.
Billions a year, right? And they specifically say in here that their prospectus, I think, that considerable time before profitable, or some to that accord. Right. You know, not that we expect profitability in 2020. Pretty sure that was not contained.
You know, and that should be a heads up for all of us. You know, as to how analysts come out. Number one, banks come out, valuing things, and then what are they worth? I mean, because whether you dug into those numbers or not, that spread is tremendous.
Yes.
And then if they can't even pull off a $20 billion, that is saying even more.
Yeah. And what's going on over at SoftBank, man? Do they just have too much money when they're not being as critical as they probably should be? On this one, especially I guess.
Yeah.
Because if you think you're, if you just had an astute New York investor, right, in Manhattan, they have one fund. They have only $10 billion to invest or something. That's it. Are you going to plow your $10 billion into a company like WeWork at a valuation of $47 billion? Probably not, I guess.
And probably not even $1 billion.
Right, and that's what they found out when they went to the street. They got some more money, and everyone said, "I'm not going to value this thing even close to $47 billion."
Right. Yeah. Pretty amazing. So let's go take a look. This is pretty cool. So Amazon. Let's watch this. Let's see. So Amazon now they're gonna open up their first multi-story warehouse.
So what? They only got single-story warehouses? I guess so. That's like the definition.
Except in Europe, I think.
That's the definition of a warehouse, I guess, right? You just stack them high.
But they're going to change the business.
Okay.
So Amazon is taking 500,000 square feet, and the whole Home Depot. Oh, interesting. And Home Depot's coming in with them. Home Depot's going to take 100,000 square feet, according to people. Okay. Amazon recently signed a lease for a 3-story warehouse in Seattle. The warehouse is the first of its kind to open in the United States with multiple floors that large delivery trucks can access by ramps.
They better be good floors for delivery trucks. No, I imagine you can obviously build them, but that's and they say in here that they're actually big, and I'll scroll right back down, right? But I guess they are big, common in densely populated Asian and European cities. Right. But in the U.S., where higher land and construction costs deter developers, so nonetheless, it's not going to deter Amazon, man.
Freight elevators capable of carrying forklifts and a ramp that enables trucks to drive right up to the loading docks on the second floor helps speed delivery. There are at least 3 multi-story warehouses planned for New York City, including a 3-story warehouse in Brooklyn with backing from Goldman Sachs, according to JLL Bridge Development Partners.
No, I think that's according to JLL, and then you get the partners and property are planning a 4-story warehouse in Brooklyn.
Look at that.
It makes sense. I mean, talk about where land is valuable. Build high, man. Build your warehouse 5 stories, 6, 7, 8, right?
Online retailers in the USA are looking for more than 9 million square feet of warehouse space, but there are only 5 million square feet under construction. Look at that, huh?
If you need same-day delivery in Brooklyn, Queens, and downtown Manhattan, you have to be in the city. The Seattle building's first 2 floors are like warehouses stacked on top of each other, connected by a ramp to loading docks and the staging area that can accommodate large trucks. Yeah, its 3rd floor is designed for offices and light manufacturing and accessible by freight and passenger elevators. Man, So they're going to have kind of their corporate offices upstairs, 2 layers of warehouse.
So look at this. They're saying, okay, land and construction costs for the structure to support large, heavy-duty loads are often double that of a single warehouse. The cost of the Prologix project was $260 a foot,
wow,
including land.
Compared to $125 a square foot
Yeah.
for single-story warehouses. So that's why they haven't been built prior. But Amazon, they want to be in places where land is at a premium. Seattle, I'm sure, to
Yes.
be in the city. New
Yes.
York, Brooklyn,
Because
for sure.
that's where, yeah.
You get the quick delivery to a majority of the people residing there.
No doubt.
Yeah.
Let's go take a look at platinum, PPLT. So this is the ETF for platinum. The Aberdeen Standard Physical Platinum Shares ETF.
Okay.
That's trading 88.24. Okay, so you're pulling back with dramatically lighter volume. You know, I'd let this be for a bit. I mean, I like the setup. You know, the last high out here is 93.47, but it doesn't mean that it can't get on and test $83, and you're at 88 right now. You know, that would be the breakout. That you break top side, you pull back, have light volume all the way to the pullback. Let me go look at the contract, actually. Okay, so platinum, active contract. You're down $15. You're trading 937. Oh, this gets interesting because this looks like it's going to reject lower price, though. Well, the day at benchmark still out there is the 28th of August. And on the contract, the high of that is 912, the low's 867. Let's go.
It's quite a day in platinum.
I said the 28th, right?
Yes, August 28th is that day. $50 movement in the price of platinum almost.
Yeah, it's huge, man.
Yeah.
PPLT, okay.
It's probably going to be that gap away.
That's what I'm thinking, right?
There's the 28th.
Is that, yeah, so that's the same price structure. That would be the buy on the way back. And, you know, I can tell you, you know, well, in fact, I'm doing a workshop for my subscribers a week from tomorrow. And this pullback, I'm totally bullish on the metal market. I like how this pullback is going. We were talking to John. Because gold's going south, bonds are going south, market's going south, that's telling me that, you know, they throw everything out normally when you're going to get a large pullback.
Sure.
And I think we might be at the beginning of it. We'll find out. And then the real question is going to be, okay, where's the turn? Now the turn, the 18th, is going to be the Fed.
Yes.
Coming out. You know, so as we'll go through the rest of this week, and we start kicking into next week, that's not all we're going to be talking about.
There'll be plenty to talk about.
There's going to be a lot. Down right now, down 72. Nasdaq off 48. S&P's off 15. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow is down 79, Nasdaq's off 48, S&Ps are off 15.5. We were just talking about SoftBank, folks. They're going to plow ahead, man. They're going to try to see what they can basically shake out of the public.
And I wonder how it comes down the line, SoftBank versus like the CEO and that ownership share of who really made this decision.
Yes.
You know, and of course, I'm sure that will come out eventually as well.
Yes.
In terms of who has the power in their voting shares or whatnot. But they're coming down the pipeline accordingly. Full speed ahead with the roadshow to kick off as soon as Monday, 6 days out. And WeWork Roadshow flies in the face of reported advice, from its investor SoftBank. So there you go. You know, and what was interesting, right, is that I was looking on the Bloomberg for kind of the same stories being reported.
Yes.
And one of the headlines up here is that a delayed WeWork IPO increases odds of SoftBank taking control. So maybe this is the CEO saying,
right,
we're not going to let this play out, and we're not going to let maybe the bonds go crazy. Maybe somehow somebody steps in, like SoftBank, and somehow gets the momentum behind him to say the CEO's not doing the job. We got to get him out of here.
Take him out.
We're going to take him out.
Because he still has voting control, folks.
I'm sure, right?
Yeah.
It's still
and he doesn't own, SoftBank owns more than them already, but he has voting control because it's, you know,
voting shares or whatnot.
Yeah, it's the superpower power deal. The thing that's intriguing here, of course, is that even on the IPO, like if they start the IPO Monday, after the roadshow Monday, that means before the end of the month, we will get, you know, right probably at the end of the month, they'll push this out.
Okay.
Because when the roadshow starts, if I'm the roadshow and you're Fidelity, they'll go to San Francisco first, Boston second, or vice versa in New York. That's the three places. Sure. 1, 2, 3. That's where all the funds are. You know, how many shares do you want? Right. This is Fidelity, okay? How many are you going to come up with? You know,
man, this will be an interesting one with everything that's going on.
Oh, it's going to be a big one. It's going to be a big one because what does happen is that these funds have large amounts of money, and no matter what has transpired here, they're going to be like, oh, do I or don't I? What's going to happen?
Right,
here?
I agree, man. So if WeWork would delay a $3 billion IPO that may net $6 billion of debt financing, the rapidly growing cash-burning company's heavy financing needs may be filled by further capital injections by SoftBank, and they already have a 29% stake. So there's where the seesaw battle is going to be in. It's like they're going to get almost 50%, and then you have all these bondholders out there, and it makes the note that bondholders may sell the notes back to WeWork at 101 cents on the dollar on a change in control. Man, lots going on in that stock as they get ready to go public. I think I would take a step backwards and watch the fun from the sidelines on the first day, unless you have some type of glimpse into why they're either going to tank or skyrocket.
Right.
It's going to take the market a little bit of price discovery to figure out where that is.
It is.
Yeah.
And what the PR has been thus far, not from the company, but basically from analysts that have been looking at the books, is that a good analyst a good CPA does not know what's in the books.
Okay.
That's the bottom line.
And then you have the other one of the corporate governance story. We have the CEO leasing the building himself,
Yes.
paying him himself. He
Right.
just came back. The story came out that they actually changed from WeWork to the We Company or something. Did you see the story?
Yes.
So he had sold the company, the brand, for $5.9 million. So they had given him stock value of $5.9 million just for the brand, which he was selling the new company. And so he rolled that back. Well, it's like, why'd you do it in the first place? You're just rolling it back because you got caught, and $6 million is not a big deal. And that's probably the thing, like, oh, I'll just give you back the $6 million, and how about you don't really dig into the fact that I'm the one that owns all the buildings that I'm leasing to WeWork? That's one I always get a little skeptical.
Oh, yeah,
Big
slightly.
time. I know, right?
Let's take a look at some of the higher volume equities out here today. You got Chesapeake Energy's up 6 cents. That's the top one out here.
Okay.
You got Marbell. Marbell's up 85 cents. Roku's down another $4. That got hit yesterday, so they're basically swinging that around. Let's go just look at that for a second. So now this equity here has been on one tear, man.
Certainly
Yeah,
has.
it's not the big, though. It's only 2 days down, right?
I
Out
know.
of 5 months.
Yeah.
Look at this. 4 months ago, it's at $57.
Yep.
$57, folks. It was trading
Tax day, April 15th.
Yeah, to 176. Yeah, this is just pulling back with light volume.
Yeah.
Jeez,
Yeah.
that is what. That's pretty amazing, man. You know, there's
Certainly is.
no two ways about that. The you know, we were talking about Antonio Brown and the Patriots.
Yes.
There's a great article today, folks. It's either the New York Times or the Wall Street Journal, right? About Bill Belichick, Crabby Bill, they're calling him, right? And this writer, he's a great writer, but he's just saying that, listen, he's saying that if it's the end of the world, Belichick will give you a 1-year deal. And it's a great article to understand, you know, why the Patriots basically. He wasn't making the case why the Patriots keep winning, but when you read the article, it really says that's why the Patriots keep winning.
Sure.
You know what I mean? That Belichick himself and the team were just so ready that at 1 past 12, okay,
Right,
that they were going to grab this guy, and then that was it.
Yeah.
And if it doesn't work out, who cares?
Right.
You know.
You got to take some risks, right?
Yeah. It was quite an article, man.
And I think a lot of those guys, you deal with a lot of drama queens, man, and what's going on in the NFL, divas, we'll call them, right?
Yeah.
And Patriots won't allow that. But the sacrifice is, you get in line, you're probably going to win a championship.
You get a ring.
Yeah, and you know, these divas, they want some rings too, man.
Oh.
So sometimes, but we'll see, because Antonio Brown, I'm a little nervous on this one, man. He put on quite a performance in Pittsburgh last year and really outdid himself with the Raiders.
He's young.
Is he at 29, 28? What is he?
I think 31 or something.
Is he? Okay.
But, you know, I mean, in the context of, you know.
Oh, he still should be at the top of his game. I agree. That's what makes it so over the top, right?
Pretty wild.
It is, man.
877-927-6648. Let's go look at that silver market. So silver started us getting a little traction here again. September, I don't want the September contract, SIZ. So we hit 1785, rejected that level. Yeah, see, this coming down to where it basically went topside from. Yeah, you got into it. So that was the lowest, 1775. Look at that. He went to 1785. You know, this is going to be a big deal. We'll see how this shakes out. But you know, silver made fast and furious high. I mean, go back 3 months, silver was at 1447. You go all the way up to 1975. Now you come down. You have an expansion of volume when you come down, and then all of a sudden, boom, overnight the volume just stops. Watch this. You know, Friday, you do 222,000 contracts. Yesterday, 135.
Yeah.
Today, we'll probably do 135, 150.
Yeah.
But you're coming into the strength, you know. So it's going to be like, okay, I know what we're going to do, the pound. Because Boris Johnson, he's going to be the news, and Brexit's going to be the news here. And see, this pound looks to me, the pound's trying to get into that higher range, man. You know, it still has a long way to go. Let me put on it weekly. No, not that, no. 124.78 is the number. You know, we've been down here like 5 weeks. Brexit, no Brexit. Pound, no pound.
market's saying maybe no hard Brexit.
Yes.
Right.
Yeah. I mean, at the pound, that's what it's looking like. Dow down 80, NASDAQ off 46, S&P's down 14. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And another unicorn is going to be, bottom line, they're starting their roadshow tomorrow.
Yeah.
Peloton.
Yeah. So I've seen the commercials plenty of times. They're all over Bloomberg. I'm sure they're all over many other networks as well. Stationary bikes. So they're looking for a valuation of $8 to $10 billion in an IPO. Worth $4.2 billion, the last round of private funding. So investors in that company looking to be pretty happy if things go as they expect. Founded in 2012, they sell exercise bikes. We pulled up the site itself, and that's what I said to you, man. I looked into it because, number one, when this first started getting advertised, I was saying to myself, what company is plowing this much advertising money? That's what I couldn't believe.
Right.
You know, all over the TVs. Well, you can believe it when you see the price, folks, and that you see that they're losing money with venture capital money behind them. So they lost, and let's just jump back, guys. They lost $196 million during the 12 months ended June 30th after losing $48 million. So they're ramping up their losses. Got to love that into the IPO, right? So their bikes, the basic one, $22.45 here you have. Now this at $22.45. That's putting you at a deal of about $58 a month they have advertised on here for 39 months.
No money down, though, right?
No money down, 0% APR, okay? Yeah. So all they're doing is just asking you for pay for it for 3 years and 3 months, $58 a month. But if you want the classes that come with it, $39 a month. So you're talking about $100 a month for a stationary bike with an app. On top of, I mean, it's just remarkable, right? It's so on the upper end, let alone that's on the 20, as you see, $58 a month. But you start getting, you know, you want shoes with that? You want handlebars? $26.94.
Yeah. And guess what, folks? Okay, just remember how many bikes you've seen in the garbage in the last 25 years.
And exercise pieces of equipment, right?
In general.
And they sell, though, man. We all know those Chuck Norris Bowflex infomercials.
Yeah,
so we'll see what happens.
Stay right there, folks. We got Think or Swim coming up next. And I'm Amos Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.